This market has been changing in a way that could cost you thousands of dollars if you don't have the right plan. And here's the crazy part. Most people in Indianapolis have no idea the market's really changing. So here's why you need to pay attention. Once you dig into the numbers, you'll see homes are taking longer to sell and sellers are starting to make price cuts. The inventory is growing and it's given buyers more leverage than they've had in a really long time. In different parts of the Indiana Metro, they're moving at completely different speeds. It's not all exactly the same. Some places are heating up and other places are kind of cooling off because the Indy Metro is made up of a huge number of micro markets and the general stats, overall stats, don't always just cut it. I'm Jason Compton and I help buyers and sellers across Indianapolis make smart, timing savvy decisions so they don't get caught on the wrong side of the market. So let's take a look at this surface level calm. The headlines, if you take a look at those, the numbers, they look stable. So Indy's market, it looks fairly steady. The median sale price for the entire city is about $250,000, which is exactly almost flat compared to last year. 1,088 homes in August sold last year, and it's just slightly more than that this year, not by much. So headlines are going to call that a balanced market. And after really a long time of chaos, especially since COVID, having something a little bit more stable sounds pretty welcome. And if we look across the entire state of Indiana and the inventory there and what the median home sale price looks like, $277,800 across the board. So that's about 4% higher year over year. And it's taking homes about 29 days or so to sell. That's across the state. And of course, that's longer than last year. Things have slowed down some. But 29 days or so, that's still, even though everybody's kind of thinking, oh, this is a panic, it's still actually really fast by historic standards. So buyers are seeing a little more choice, but not so much that sellers have lost all of their leverage. But we are seeing signs of a buyer tilt around the whole Indy Metro. This past summer, there were roughly 1,500 more sellers than buyers. That's about a 21% gap. That's a pretty clear sign that the leverage is starting to shift away from the sellers. Now, why this matters, buyers who just read the headlines, they may think that they have less leverage than they really do. And sellers may see steady prices and list too high, and they just end up sitting longer and have multiple price cuts. So the surface calm is misleading because underneath, the tempo of the market really is changing. So while the headlines make Indy look completely calm and steady, you dig into the details and it's clear the market is definitely in transition. So let's break down what's actually happened. So this year, first thing is that the tempo has changed. Homes sit longer than a year ago. And of course, a year ago or so, listings were gone in 2 weeks or less for the most part. And a couple years before that, sometimes it was hours or just a few days. But now the citywide average is about 22 days. And across central Indiana, the days on the market is about 40 days or so. Now that might not sound huge, but in real estate, a shift from under 2 weeks to over 3 weeks, it's just going to change the psychology of things. It changes the way buyers and sellers both behave. And if you want to translate that, the urgency for buyers for the most part it's kind of fading. They don't feel forced to write offers the very first weekend or the very first time they see a home right now. So then the second thing is negotiation is back. Price cuts and softer sale to list ratios, they're definitely in play now. Nearly half of all active listings in August, that's about 46%, around Indianapolis had a price drop. That's a much bigger share than what we saw last year. Sellers are accepting offers at about 97.8, 97.9% of their asking price, and that's down from 100% to about 99.2% that we saw last year. And that's kind of small on paper, but in practice, it's fairly large. If you're looking at a $400,000 home, that could be a swing of $4,800 to $8,800 in negotiation space or change space. So the era of take it or leave it, it's over, at least for now. So concessions on price, inspection repairs, buy downs, you name it with the concessions, they're all, for the most part, back on the table. The next thing that changed is the inventory. It has built up a little bit, but not everywhere. So Central Indiana had about 5,900 active listings in August, which is up a significant amount, about 18.3% year over year. And the supply, it's ticked up from 1.8 1.8 months to 2.1 months. That's still tight, but it's no longer panic mode. And what I mean by months of inventory, 1.8 to 2.1, is that if there are no new listings that hit the market at all. But here's the strange little nuance. New listings are actually slightly down from last year, about 1% or so. So most homes are actually sitting. It's not like we've seen an 18% flood of new listings. So it's not a new wave of sellers. It's just a sign that buyers are taking longer to commit. They're actually shopping around a little bit. And if we look at demand signals, they're mixed. It's not a crash. The pending sales are up about 6.5% year over year, and closed sales are about 5.3% up across central Indiana. So the homes are taking longer to sell. More homes are still being bought and sold than last year. So this isn't a collapse, it's just a rebalancing. Deals are still happening, but the terms, again, are different. Negotiation is back. So why this is the shift? The speed of the market really changed first. That's why the data sources don't exactly line up. Sellers are definitely learning they can't overprice. Buyers are realizing they have more time and options than they had in the past. So this is how leverage starts moving from the sellers to the buyers. So the shift isn't just about prices, it's about time, negotiation, it's about psychology. And it helps to create very different micro markets depending on where you're buying or selling. And this is why you should reach out to us. My team and I, we work in these markets every single week, and we know how it can affect you. So send a message our way and we could talk about the good and the bad of your specific market where you want to be. All right, so let's look at a couple of examples. Two different markets. We're talking micro markets with two different speeds. So if we look at downtown Indianapolis, the prices there, they're climbing, but it's a slower tempo there. The price is up about 12.3% year over year, and it's sitting about the median price at $392,500 or so. But the homes are taking longer to move. They're about 40 days on the market compared to 35 days just a year ago. The sale to list ratio, it's dipped from around 99% or so to about 96.4%. And that's showing that definitely some room for negotiation there. So if we translate this, the demand is actually keeping the prices fairly strong. But buyers in the downtown area, they've got a little bit more room to negotiate than what they usually think and what they've certainly had in the past. Now, if we look to the southeast side of Indianapolis, it's going to be cheaper, faster, and certainly softer prices. And the median price has dropped pretty sharp there. It's about $188,500 right now, and that's down over 20%, about 26.1% year over year in some parts of Southeast Indy. But the homes there are actually moving faster. They're about 13 days on the market compared to 16 or so last year. And the seller to list ratio is really high. It's still high. It's about 99%. But buyers have to compete when these homes hit the market. So affordability, it keeps the demand high, even as the values slide. And that's really great for entry-level buyers, somebody looking for their first home or needing a home to downsize to, but it's going to certainly be a little bit tougher for sellers. Now, if we look at the suburbs and the statewide picture, what's going on there? So we've got the median sale price about $277,800, which is up a little bit, about 4% year over year. And the average days on the market is about 29 days or so across Indiana, and that's longer than last year. That's still actually really historically fast. So the suburbs and surrounding counties, they're moving a little slower than they did last year, but they aren't seeing the deep price cuts that you see in certain parts of the southeast side of Indianapolis. So what does this mean for buyers and sellers? Well, you're going to face two very different experiences depending on where you shop. An example, downtown, it's going to be higher price, more negotiating power. Southeast, more affordability, but faster competition. The sellers in premium areas, you're going to have to price correctly, expect to stay on the market a little bit longer. And in entry-level areas, the demand is still there, but if you price too high, you definitely expect some price cuts. All right, so what's driving splits in some of these different micro markets around Indianapolis? Well, it's multiple things. It's inventory, it's, again, buyer psychology, and it's also leverage. So let's talk about how buyer behavior is changing and what that means for anyone that's trying to time the market. All right, so to do that, we've got to look at inventory and the breakdown of it. So inventory is definitely rising but slowly. Central Indiana had about 5,900 active listings in August of 2025 this year. That's about 18.3% up year over year. And again, that month of supply increased from 1.8 to 2.1 months, which is actually still a seller-leaning market, but it's trending more towards a balanced market and trending more towards the buyer side. Once we get to that 4 to 6 months of inventory, we know we're in a truly neutral market where nobody's really advantaged. So even though it's not quite all the way into the neutral market, and it's still really technically a seller's market, buyers still have a little bit more choice and a little bit more time. So it's not a total frenzy like it was several years ago. Second thing is that there's fewer new listings coming in. And even with more active inventory, the new listings actually dipped about 1% year over year in August, which is really weird. And that means that rise of active inventory is just from homes sitting longer and not necessarily a flood of new listings coming in. And if we look nationally, this whole trend is bigger than just Indy and what we're seeing across the United States. Active listings were actually up 20.9% year over year in August. So we are not alone in this. And this actually marked a trend that's been going on a while. It's the 22nd straight month of new home or just existing home inventory every single month. 22 months of inventory growth across the country. So what's happening in Indy, it's just a part of a broader national trend of cooling in the real estate market. So who's behind all the listings that are out there? And it's actually a mix of people selling their home. You've got a lot of equity-rich homeowners who have a lot of equity. They bought well before COVID. And you have a lot of investors thinking the same thing. They bought years ago, lots of equity, and they're putting those homes, those investment properties back on the market. Then you have regular sellers out there. You've got some that are testing the market, or they just want to move, or they really need to move. But you still have some that are locked in to those low interest rates. I mean, those things below 3%, they're just not coming back. So the inventory isn't just more houses, all kinds of different sellers creating just this patchwork of different situations and different types of sellers that are out there. Now, why this matters for buyers? You'll certainly have more leverage when a home has been sitting on the market for more than 30 days. And we are up against, let's say, a super motivated investor out there too, trying to unload their property or properties. So for sellers, your pricing is absolutely crucial. The market right now and the way that it's trending is not forgiving at all of overpricing your house. So how are buyers reacting to this new tempo and these changes? What are we seeing with myself and my team every single week? Well, the first thing, and this is probably pretty healthy for everybody, is that the urgency is fading. A year ago, and 2 and 3 years ago, everybody was just under complete crushing pressure to write an offer as soon as they saw a place because it was going to be gone immediately. But now with the average days on the market rising to 22 days and 40 days across central Indiana, a lot of buyers are really starting to take their time and shop around a little bit. Sometimes they're waiting 2-3 days, maybe sometimes even 2 to 3 weeks before they're making offers because they know that new options are probably going to keep showing up. So to translate that, the buy now or miss out forever mentality, it's changing to, yeah, these are really nice, but let's see what comes up here in the next couple of days or the next week or so. The second thing is that buyers have more leverage. With 46% of listings seeing price cuts in August, buyers definitely know that they can negotiate. And when the sale to list ratios have dropped under 98%, it's sellers just showing that they're willing to make concessions and have made concessions already in the form of price cuts. So inspections, closing cost credits, and even rate buydowns, they're all back on the table. Third thing is, of course, affordability shapes choices. The mortgage rates are lower than what we actually had here in the past year or two. They're still nowhere near what we saw in COVID times. And that's, of course, keeping a lot of sellers locked in from listing, but it also means buyers are really selective then about the house that they want or the location they want it in. They're going to be paying more overall and longer term with those slightly higher interest rates. So there's also a psychology shift. So instead of panic buying where you just have to get whatever it is that you can possibly get, buyers know that they can wait, they can negotiate, they can find some leverage, which really is a complete reversal from 2021. So the power dynamic in indie real estate, it's just very quietly tilting towards the demand side, even though the prices, they have not collapsed. So what does this all mean if you're actually planning to buy or sell? Let's break down a game plan for both sides in really what's a new reality, a new market. So if you're buying, leverage is definitely back. 46% of listings saw price drops in August, and you're seeing more than 3 weeks on the market for homes, then that means you've got some room to negotiate. And your best targets for homes are definitely those homes that have been on the market at least 30 days, a month or so. You probably have some sellers who are fairly motivated to get that home under contract. And if you're looking at new builds, new builders have all kinds of incentives right now. They have lending incentives, they have different pieces of build incentives. This is one of the things that we actually help a lot of clients out with, which incentives they can get. They may not know, and you reach out to us, we can figure out what incentives that you might be able to get through a new builder, and then also negotiating those. And also standing inventory, so spec homes. A lot of builders want to get those unloaded and off of their books before the end of the year, but they certainly want to get them off their books when you get to the point where you're closing out different quarters too. So there's some room to negotiate a lot of times on the price for a spec home and that inventory home. So we're just seeing buyers in general have a little bit more breathing room, and they're able to shop a whole lot smarter for a home, which is really quite healthy. Now, if you are selling your home, I cannot state this enough. The correct pricing is crucial right now. Overpricing just means that you are absolutely going to sit longer and you're going to endure multiple price cuts. And you might even cut right past the number that you would have gotten if you priced it correctly when you hit the market in that first week. Homes are selling at 97.8% of the list price, not at that 100% that we saw a year ago and several years ago. And if you overprice, you're going to be at the low end of that, if not out of that range on the lower end of the sale to list price. And no matter what, expect longer days on the market. 19 to 22 days on the market now compared to 14 to 17 or so last year. And of course, much faster than that in years prior. The expectation is still there to sell fast, but you have to change those expectations because things have changed. Expect a longer period of time on the market. And of course, your home, the presentation of it, it matters immensely now. So the condition of it, what is that like? The photos, the marketing pieces to getting your home on the market, and then that realistic pricing within all of those parameters. That is what's going to keep you competitive. So resetting expectations. Strategy is going to be stubbornness all week long. And the next thing here too, seasonality, it still matters around here. So we follow the school year an awful lot. Rise in the spring, we see a dip around the holidays, we see a dip right after school starts in the real estate market. But historically, spring brings some stronger prices. But of course, you're probably going to have more competition from new listings in the spring as well. And then for buyers, you get into that late summer, fall, around the holidays. A lot of times you're going to run into more motivated sellers and less competition from other buyers at that point too. So timing your move around some of these windows can end up saving you some money in the long term, whether you're a buyer or a seller. So the smart play right now for buyers is just focus on those properties that have been on the market a little bit longer. And then you can also pair different inspection findings or concessions for a little bit more leverage. And then sellers, again, price realistic from the start and consider offering incentives of some kind or concessions right up front to get your home sold a little bit faster. Because the winners in this market, they're not just lucky, they're strategic. You have to be more strategic in a market like this. The indie housing market isn't sitting still. On the surface, the prices look steady, but underneath, again, homes are taking longer to sell. Nearly half are seeing price cuts, and you have different areas across Indy because we have a lot of micro markets. They're moving at different speeds. So that means if you don't have the right plan, you could either overpay as a buyer, or you could sit on the market a lot longer than average as a seller. I'm Jason Compton, and I help buyers and sellers across Indianapolis navigate all of these shifts with really smart, timing-savvy strategies. So if you're thinking about making a move, reach out and we'll put together a game plan that fits your goals and all of the realities that we see here in today's market. And before you go, check out this next video, and we'll catch you in the next one.